Rates are at a point now where a full 70% of all the listings out there right now, all the homes, have a rate that's below 5%. And assumable loan is effectively a loan on a home that can be taken over by a new buyer. A couple interesting fun facts that most people don't know. VA loans are all assumable, and VA loans can be assumed by non-veterans. VA loans can also be assumed by investors. The best assumable loan is one that has a good interest rate and that the listing agent has taken the time to market.
Hello, RWorld. Welcome back to another episode of RWorld Talk. Thank you for being with us. We've got some an exciting new product that we're going to be going over today. So make sure that you're tuned in and you're listening up, because this actually could make a big change to the way that you do business. We're going to talk about assumable loans, and we have Andy Taylor here with RetroRate. Andy, welcome.
Thank you for having me. It's been great to visit.
Well, it's fantastic to have you here. I know members of BeachesMLS board of directors. We've been talking with you in the past about this new product, RetroRate, which is already rolled out in the dash that you guys use every day. It is attached to your listings, and basically the system is doing a bunch of work behind the scenes that Andy is going to go over with us here on the podcast. Andy, can you start by telling us a bit about your company and how RetroRate really fits into the broader mission of helping agents and buyers navigate today's market?
Absolutely. It's an interesting fact. I mean, why are we even talking about assumable loans? Well, we're talking about assumable loans because rates are at a point now where a full 70% of all the listings out there right now, all the homes, have a rate that's below 5%. And when I say 5%, like, don't think 5.XX, think of 4.9% and below,
Sure.
which means that there's a good amount of inventory that are sitting on these absolute gold mines and nobody seems to know about them. And so we're talking about these loans because this is really truly a key to affordability at a time when people aren't able to afford homes and transaction volume is suffering as a result. So we think of this as a key that's really opening up the market, and really truly one of the best, most scalable ways for buyers to have this below market interest rate, short of doing rate buy downs.
Yeah, I think it's a fantastic product. For you guys that are listening, I know that we have people across the country and homeowners and members of ours alike that tune into our World Talk. I will say that Beaches MLS is the first ones to have rolled out RetroRate within our platform. So if you are not a member of Beaches MLS, I suggest that you jump over and make sure that you get subscribed, so that way you can get access to this incredible platform. I've received already some great feedback for the product that RetroRate is offering. We're going to get into really why don't we start with this? We're mentioning assumable loans. You had mentioned to 70% of homes having that sub 5% rate that would be assumable. Why don't we get into just a little bit of the nuts and bolts of what the assumable loan category is?
Yeah, absolutely. We did kind of jump ahead a little bit. And what we found is that most people don't even know what assumable loans are. So I think it's best to start with the definition.
Sure.
And an assumable loan is effectively a loan on a home that can be taken over by a new buyer. So the buyer is able to take over the seller's rate. They're able to take over their term. They're able to take over wherever they are in the amortization cycle. That new buyer is qualified just like any other buyer would be, usually on a cash flow basis, and the seller is given a free pass to sort of walk away from the home. And so they're basically cashed out. They don't have any additional obligation on the home after it's bought, after it's assumed. Couple interesting fun facts that most people don't know. VA loans are all assumable, and VA loans can be assumed by non-veterans. So a non-veteran can have a veteran's loan. Um, Interestingly, too, VA loans can also be assumed by investors. So it's sort of a new category for people who are operating in that space. And this isn't a new financial instrument that like some startup came up with. We didn't come up with it. I mean, it's been a part of government-backed loans since government-backed loans have been a thing.
Sure.
And so this is something that is available to people, and most people just don't have visibility into it because there hasn't otherwise been a way of even finding it as a loans to start with.
Yeah, I don't know a single realtor that I know that has ever gone and looked to find out if their seller's loan was assumable. You guys take all the guesswork out of that and just serve it to us on a silver platter saying, hey, you just took this new listing. Great. They've got an assumable loan. Why don't you market that? Which right now we've got so many buyers that are sitting on the fence due to the high cost of acquisition of that home. But then you talk about what makes that cost so high is not only the purchase price, but it's what is the interest rate. So
Yeah.
when you've got an assumable loan, that assumable loan might not be as much money as what that buyer necessarily needs in order to purchase, but they can always get a secondary loan product in order to bump up whatever they need to make up the difference, correct?
Absolutely. So there are some assumable loans, and probably more than you think, that actually are the sort of perfect trifecta. You have a better interest rate than you would get on the open market. You have to put less money down too than a standard 20% like fixed. And the overall interest they're paying is just is perfect. So you're saving money in all three areas. Now, that isn't always the case, as you point out. Sometimes the buyer always has to come up with the equity gap so they can pay out the seller and the seller is able to walk away without any additional obligation.
Sure.
That equity gap can be large in high appreciating areas. And so there are home equity products that are built for just this thing. We work with several partners that we're able to put people in touch with. But more or less, what ends up happening is you get a second loan, an equity product, the new buyer does, and that has a rate usually about like a percent or to a percent and a half higher than your standard prime rate. However, it's for a smaller amount. It's for just the down payment amount. And that combined with the going interest rate usually ends up in a blended rate that's like it puts them still in the money.
Okay, awesome. So, why do you think so few listings are actively marketed as assumable, even when like such a significant number may actually qualify?
Absolutely. This is 100% an awareness problem. Um, People don't know that they have an assumable loan. Sellers don't. Most sellers don't even understand mortgages. They definitely don't understand assumable loans. And so listing agents don't even think to ask for it. They don't
Sure.
often ask about it. And because listing agents aren't asking about it and they don't know that the listings that they're selling have an assumable loan, well, that means it's not entered into the MLS. That means it doesn't make it into the IDX field. It doesn't make it out into burger sites. It's not on the portals. So effectively, you have this like functional invisibility of assumable loans. And that's kind of where we come in. I mean, ultimately, we have a web tool that agents can use to look at assumable loans, find all the assumable loans. As a matter of fact, we only show homes that have assumable loans. We don't show everything else.
Okay.
So it sort of flips it on its head. And this is built in as well into the MLSs in addition. So we will serve that data back out into the Beaches system that allows people to search for it directly within Flex MLS, the same tools they're already using
Right.
each and every day. Furthermore, if you're a listing agent and you enter in a listing into the MLS and we detect that you have an assumable listing, then we're going to notify you. We send you an email just to you, just to let you know, say, hey, did you know that you have this assumable loan? Haven't marketed it.
Right.
And really, honestly, like if you have an assumable listing, I know everyone loves to talk about stone countertops, stainless steel appliances, but you should be talking about the assumable listing. It is the number one way to drive interest to your listing, whether or not it ends up even being assumed or not. It's the way that you can nearly guarantee a line of 100 people outside each and every one of the open houses that you host.
Hey,
Um,
any additional
yeah,
marketing point, selling point that you could possibly put on that property? I mean, it's amazing for the seller. And I mean, you having listing inventory on your books is not doing you any good. It's when you sell that listing inventory, is when you end up being in the positive. So any way that we could
absolutely.
possibly get that out in front of more people and in front of more buyers, and maybe hook that one buyer that had no idea that they could afford a property in that price point, but this assumable loan product might be able to help them get over the hump.
Absolutely. And we even take it a little step further too. For listing agents that have taken the time, because some people do actually market them. That usually it'll be one or two listing agents that are like just real specialists in a particular area.
Sure.
And for people that have taken the time to market their homes as having an assumable loan, we will put a promoted badge on the site. And if we detect that you've marked it in the MLS as an assumable, yes, no. If you put it in your public remarks, if you talked about it in your private remarks because you're essentially signaling to other agents that you're ready to go once an offer comes in,
Right.
then you're going to get that promoted badge. You're going to be at the very top of the list. You're going to be in the top of search results. You're going to be at the top of like those weekly digest emails. And the reason we do that, I like to joke. Someone asked me recently, so what's the best assumable loan? And we used to have this really complicated like scoring algorithm, and it would basically say, well, this is the top one. Turns out it's actually a lot easier than that. The best assumable loan is one that has a good interest rate and that the listing agent has taken the time to market,
There you go.
because that's the one that's the most likely to get sold.
Right. Okay, fantastic. So I'm going to make a confession here. I'm a real estate broker married to a mortgage loan officer, and I have no idea if my loan is even assumable. So um, this kind of technology that you guys have put out there is really a game changer for everyone. Talking about from a transaction standpoint, what makes assumable loans more complex than traditional financing, or are they not complex at all?
They aren't exceptionally complex. I mean, you can think of an assumable loan process as being like a short sale that doesn't have a reduction in principal.
Okay.
I mean, it's essentially a name swap. Now, the buyer has to be qualified just like they would normally, but even the underwriting process for a new buyer is typically a little lower bar. It's usually a cash flow analysis. They just want to make sure that you can actually make the monthly payment
Okay.
each and every month. Furthermore, assumptions don't have the thing that normally nukes a traditional financing, which is the appraisal. There's no appraisal in an assumption because the home has already been collateralized against the loan.
Okay.
So that's the number one reason why deals will fall through, and that isn't even an option. So the last transaction that we helped a buyer get across the finish line took 33 days, start to finish. It was a VA loan in California, and that buyer is now sitting large on this really great rate that they otherwise wouldn't have been able to get. Um, and so I think that the thing that like adds the most amount of time is just simply a lack of understanding of what it takes to get across the finish line. Yeah, most
Okay.
people haven't done those things. Again, we already talked about how most of them don't even talk about the fact that they have an assumable loan. So they just haven't done them before and they don't really know what the steps are that are involved. And that's why having a trusted partner like the concierge service that we're offering to get that across the finish line, it can be a meaningful way of like saving yourself time.
So if a buyer is working with a lender that they like and they've already got a relationship with, and they now find that there is a house that is available with an assumable loan, can they continue working with that lender, or do they need to go to the bank that is holding that assumable loan?
Yeah, so the way that it will typically work is that the buyer and well, the seller first has to give permission from their existing servicer.
Okay.
It's for that servicer to talk to the buyer because it is an active loan, and typically the lender is not going to talk to someone else about your loan.
Of course.
Um, However, that could be the existing lender that you're working with. Sometimes it's not. If it's not, that lender that you're working with might have the option to provide that secondary loan, however.
Okay.
So, yeah, the way I look at it is this isn't a destruction of net new loans. Really, assumable loans unlocks the deals that just wouldn't have happened in the first place.
Sure.
Um, because if you're a buyer, every percentage point of drop in your interest rate equals roughly about $150,000 principal and interest that you're saving every single year. That's on a typical $400,000 home.
Okay.
Um, which I know in West Palm Beach, like you're not going to find much for $400,000, uh, but that's a significant savings.
So, how does RetroRate quickly to help agents quickly identify, analyze, and present those assumable loan opportunities inside their normal workflow?
Absolutely. So, first and foremost, if people take away one thing, it's really like how to get into RetroRate. Because if you hear all about me explain what RetroRate is and you don't even know how to get in there, that's going to be a problem.
Sure.
So, RetroRate right now is available in the resources pane for Beaches MLS subscribers. It is a blue icon, kind of looks like a tree. You can favorite it; it'll stick at the top of your resources tab.
Yep.
But if you just search for RetroRate, you're going to find it. If you click through to it, it will take you into the RetroRate web application. And that web application is going to do a number of different things. First and foremost, it's a search engine that looks very similar to what you'd find on, Redfin or Zillow or any of these other like broker sites.
Okay.
Now that isn't a coincidence. I actually was the head of product at Redfin for a long time. So,
Okay.
so I may know a thing or two about
You
this
know
idea
what you're
website.
doing.
Yeah. And, essentially, we're only going to show you those assumable listings. So if you actually click through on one of those assumable listings, it's going to bring up a details page. The details page does a couple different things to kind of help orient you as an agent. First, it's going to give you a side by side comparison of how does the loan on this particular home stack up against the prime rate. And
Okay.
we pull the prime rate. We're constantly reevaluating this on a daily basis.
And that information comes through the emails that we get from you as well.
Bingo. Yeah, exactly. And you're going to find that side by side. And that then we also have what we call a savings visualizer. That
Okay.
savings visualizer shows how much would a new buyer save in monthly P&I, yearly P&I, and then lifetime savings over the life of the loan. Turns out the people that assume loans don't tend to get rid of those loans; they stick with them. They're lifers, so they don't churn out as often. It's like the 5 to 7 years.
There's some really low interest rates that are out there from the COVID days. I mean, like incredibly low.
I mean, the way I like to say it is that everyone who could buy a house, in 2020, at incredibly low rates did.
Should have done it.
Yeah, you either bought a house or you refinanced and or you just missed it a little bit.
Right.
And so that's why everything's so concentrated in the sub 5% range. I mean, it's really, really remarkable.
Awesome. What kind of real payment difference? You had mentioned, typical $400,000 loan, that $150,000 savings, with a point. But what kind of real payment difference do you think a buyer could see by assuming a lower rate mortgage compared to securing at today's rates? I think, a couple days ago we were hitting 5.9, but now we've got, some unrest in the world that has made interest rates start to go back up again.
Absolutely.
What are we looking at, as far as real quantifiable payment difference in savings?
It can really vary. I mean, I've seen things as low as 2.25, even just here in Palm Beach. I have seen things as high as like $10,000 of savings a month. Actually, that particular one, I was trying to find what is the home that's closest to Mar-a-Lago that
Okay.
had an assumable loan, and it in fact did have a savings of about $10,600 a month.
Wow.
Now that's on an exceptionally high price point, so that's where your
Palm
savings
Beach
comes there.
Island, yeah, it's not
Yeah,
cheap over there.
exactly. But, yeah, it can really run the gamut. But, I mean, really honestly, like, my last company that I worked for was Credit Karma, and what we found was that many people didn't even have, like, a lick of savings in the case that they had, like, a medical bill or a flat tire or anything. And so, yeah, I know it's fun to talk about a $10,000 a month savings, but for most consumers, being able to save, like, $500 a month or a couple $100 a month
Could be
is a
huge.
huge savings.
Yeah.
We calculate that actually, uh, right now that there's probably about like 25 total loans last year that were handled through assumption in the Beaches system. 25.
That's it.
That was it.
Wow.
And we think we can get that a lot higher. I mean, it isn't a stretch to think that like 200 to 1,000 loans a year could be assumed. And that's with like the 5 to 10x, increase in visibility that we're
Sure.
providing. And at that rate, you're saving your buyers anywhere from like $1 to $5 million a year in principal and interest. And that's a noble goal. I really think like people get into real estate because they're trying to get people into homes. They're trying to like get them into homes and not spend, as much money as there, or not break the bank.
Sure.
And so saving the people of South Florida like $1 to $5 million a year, that's a fantastic thing for beaches to be able to do.
You had mentioned, at the beginning of the pod when we first started talking about that verified badge for anybody who's out there actively marketing, an assumable loan, that they found through RetroRate. Do you have a public facing site where the public can actually go and search for assumable loan properties here in South Florida?
We don't do the public facing site, and the
Okay.
reason we don't do that is we don't want to be, a lead capture portal that's going
Understood.
to capture the consumers and then try to sell it back to you. So for us, the public facing, site is the MLS itself.
Okay.
The public facing is it goes into the MLS. We want to make sure that like beaches agents do everything they possibly can to get it into the MLS so that it can then go back out to the public facing sites that you have relationships with.
Beautiful.
And I think that's really truly where it starts. We're beginning the talks and trying to establish RISO standards around assumable loan data, so that it isn't something that we're just hacking in. It's something that is a part of the MLS standard that everyone can sort of like participate in.
Oh, we love when the data talks properly, and it's all
Absolutely.
speaking the same language. You mentioned, the concierge service. Let's take a little bit of a dive into that. What role does that concierge service play in helping these transactions successfully reach closing while still keeping the realtor central to the process?
Absolutely. There are really two flavors of the concierge service. First and foremost is the marketing services, and really, an assumable loan is best if it starts with the seller. The listing agent and the seller have to agree that, hey, this is a strategy that we're going to take in marketing the property
Sure.
because we think it's going to get more eyeballs on it. It
Mhm.
does, especially in a world of picky buyers. And so we have a marketing concierge service that works with listing agents to help them identify which have assumable loans, but also we'll work with the servicer to verify the information, to get the initial buyer requirements so that that listing agent is ready to go the moment they have an assumable offer in hand. And that's speaks to that earlier question about like how long do these things take? Well, they don't take long if you're prepped and ready to go, just that most people haven't done it before. Um, Interestingly, we are just about to roll out, and Beaches will probably be the first to see this,
We like that.
a new listings dashboard. And what that is if you log in, you're going to see of the word dashboard on your side pane. You click that dashboard, that's going to show you all the listings that you, as a listing agent, might have that have assumable loans. And we're going to give you a point by point sort of instructions on how to both get that free promoted badge, where we detect that you've actually you promoted it, and we're going to put it promoted, but also give you instructions on how you might verify it with the RetroRate concierge service. Uh,
Okay.
so that's concierge service number one. It's more marketing services oriented.
Right.
Concierge service two is for buyers and buyers agents that probably haven't done an assumption before, and we will work with again the servicer to work with the listing agent, to work with the seller, to work with everyone. The problem with assumable loans is that because of the strict way that that a servicer is able to communicate, usually the seller is completely out of the loop. They don't know what the buyer is doing. So if they engage with our servicer, what it does is it creates a relationship that allows the listing agent and the buyer's agent to communicate with one another to keep
Okay.
things moving along.
Beautiful.
And so that's been a huge boon
That's what
for
we
them
like.
as well.
Progress during the transaction.
Exactly.
Keep
Yeah.
going. Keep going.
Yeah, I like to think that, like, we do have some great technology, but we're very, very good at annoying servicers and keeping them on track. Um, Sorry, services. That's just
It's
is
the name of the game.
exactly.
Yeah, you gotta stay on top of people. I
Stay
mean,
on top.
we do it with our with our loan originators all the time. It's like constant phone calls. Where are we at? What happened? Did they put the application in? When did you order the appraisal? I mean, you've got to stay on top of people. Which, sorry guys, I know you don't really like that many calls from realtors, but we're transaction
We're
brokers.
nice
It's what
about it.
we do. Yeah, we do.
We're
We're
nice
just
about it.
constantly trying to put people together and get everybody at the closing table.
Well, I mean, even the services themselves don't necessarily know how these things happen. I mean, if it a lot of people have landing pages that talk about the loan assumption process. Try to find a telephone number to call like some of the biggest like loan services in America. You're not going to find it on that site. So you have to
Right.
call the main line. And usually that main line isn't even going to know what you're talking about. They're not going to have it. But yeah, that's the kind of technology that we built is like, well, let's just call the main number. We know what the loan assumption department telephone number is and the fax number is. And we've got technology that like automate a lot of the sort of reaching out to them and sort of keep it on track in a
Right.
way that's like, yeah.
Call any lender in the phone book right now. Phone book. I just aged myself. Call any lender that you could find online and ask them if a VA loan is assumable. And I bet you 9 out of 10 are going to say no. And the one that says yes is going to say yes, but it must be another VA buyer, which is not the case.
Yeah, or they'll say something along the lines of another common misconception is that assumptions can only happen between family members. Um, Assumptions do often happen between family members, especially in the case of a VA loan, surviving spouse, something
Right.
like that. But that isn't all the only way that it can happen, and that's usually what you'll hear. Sometimes you'll get a lot of like hand in your face telling you no, and the truth of the matter is that you can do it.
And the buyer still needs to qualify for the loan.
Absolutely,
You
yeah,
can't be a buyer that's got, zero credit score and say like, I can't qualify for anything. Oh, I can assume that loan. I'll take that one. And say, no, 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 it doesn't work
exactly.
that way. You
Well,
still have to qualify.
and that's absolutely fair. I mean, if you're a servicer and you're the lender, you absolutely have the right to sort of determine who is qualified to assume the loan. I
Right.
think that just makes sense.
Yeah.
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 But
They've got to make sure that you can repay the money that you're assuming.
but yeah, exactly. But assumability itself is a right of the loan. It's something that's literally written into the mortgage contract. The servicer doesn't get to determine whether or not that loan is assumable or not. It is assumable.
Right.
So
Just by the right qualified person.
just by the right qualified person,
Sure.
correct?
So do you see assumable loans becoming a meaningful segment of the market moving forward, or do you think this is just a response to the current rate environment that we have?
I think that it has the potential to be something, much, much bigger. As I mentioned, the volumes on assumptions are just like, incredibly low. And it makes me a little sad because every time a new loan is originated that could have been assumed, I feel like I'm crying on the inside a little bit, right? It's just like, come on, it's this wasted opportunity. I mean, these diamonds in the rough.
Right.
and they're just ignored largely because people didn't know that they were there at all. So this is one of the reasons why we are taking this like sort of MLS first and agent first approach. We feel like without the education, if it comes from consumers, nothing's ever going to change. It's always going to be a small part of it, of the environment. But if we can actually sort of get it to be a part of the RESO standard, and we can get it such that more MLSs adopt it, and it's begins to be exposed to more and more people, and there's an awareness change, then we think there can also be a sea change in transaction volume. Yeah.
Awesome. Well, we're going to let you get back to work, doing the good things that you're doing for all of our members. Is there anything that you want to leave us with that we haven't covered?
No, I would say that if anyone has any questions, any of your Beaches subscribers or members have any questions at all, they can feel free to reach out to either support@retrorate.com, hello@retrorate.com. They can email me directly. Any number of different. We just want to make sure that people understand this and are feeling good about it.
Okay, fantastic. So Andy's cell phone number, I'm just kidding. Thank you, Andy, for being with us. Really appreciate it. If you guys haven't checked it out, a retro rate is right there as an icon on your dash. Take a spin through, see what kinds of properties right in your farm area might have assumable loans that you can now pitch to your buyers. If the listing agent isn't doing the pitch, maybe you can give them a phone call and say, "Hey, I found this on retro rate." Spread the word. Get the listing agent to have a conversation with that seller, and maybe that could be the perfect home for your buyer that they didn't realize that they could afford until they were able to assume a loan.
Absolutely.
Awesome. Well, thank you, Andy. Thank you guys for listening, and we will see you right back here next week on Our World Talk.